welcome. My name is Gené Teare. I am at Crunchbase and I write on women in tech, women in venture, funding trends, and I just launched a seed series talking to angel investors. I've been at Crunchbase forever. When it was one day, 10 years ago, part of TechCrunch. And so I've stuck with Crunchbase, I work with our data and our report, and it's great to be here with this interesting panel. So welcome everyone. Hi.
How are you doing?
So to kick off, we have 4 investors on the panel. I think all of the investors are focused more on the early stages, so it's sort of seed all the way through to Series A. We have Calvin Chin, who is the managing partner with the E14 fund. We have Lopa Desai, who is from Garrett and also invested with Golden Seeds as an angel investor. We have next up Mike Loftus, who is a venture partner with F50, and finally Jennifer Bancini, who is the managing partner at Mighty Capital. So welcome all of you. Sorry,
I want to correct that. I am a general partner with Mighty Capital, but the owner of managing partner belongs to Asimawadi, who I think is
and you're a founding partner.
I am a founding partner, yes.
Okay, perfect. Okay, great. Welcome all. So to kick off, what I'd love you all to do is just to go down and maybe start with Jennifer, is to talk about your fund, the size of the investments that you make, how many investments you make per year, the sector focus, so we can all get a sense of where you invest.
Okay, so Mighty Capital is an early stage investor. We look for very strong leadership teams, product market fit, and a clear go-to-market strategy. We tend to invest with a smaller check at a later stage meaning Series A, Series B, check sizes 600 to 2 million. We're able to do this because we give our entrepreneurs access to products account, proprietary access to this very large network of product managers who are early adopters. It's a hiring pool, potential acquirers. So it's typically where we invest, and we're in the B2B tech space. And we made 2 genomics investments and want to continue investing in personalized medicines.
Got it. And how many investments per year?
It depends on the opportunities, but let's say 7 a year, potentially.
And you typically don't lead, you co-invest?
That's correct. We have a co-investment model because our check size is smaller, and we come in at the sweet spot where we don't create any trouble for the lead investor. Our check's not so big to be a problem, but we're bringing significant value to the entrepreneur, so the check is worth the money.
And which lead investors do you like to?
So we've co-invested with Benchmark, Vesper, Roche, Agilent, Aligned Partners, several.
Got it. Okay. Mike?
Well, hi, how are you doing today? I can just simply say you've been hearing about F50 and what we do all day long, so I can probably not add much to that at this point, except to say that we're continuing to grow and manage ongoing adventures like we've been doing.
Okay, Lopa.
Hi, Desai for a single-family office in the Bay Area. Our direct investment portfolio is the second generation. I'd say the current iteration has been live for a couple of years, 2.5 years. We primarily focus in early stage, seed, Series A. We are similar to Mighty Capital, not looking to lead the round, but are looking to be a strategic investor and are active with the companies in which we invest. We like to specialize or focus in, also similar to Mighty Capital, in enterprise tech. In particular, I like to say it this way, we look for the unsexy businesses that are not the fun, firms.
And how many investments per year?
About 3 to 5.
3 to 5, okay. And the range you said was?
It depends, right, on the company, but I think our check sizes usually anywhere from, if we're at seed or even pre-seed to A, we go anywhere from 50 to 250K. And we do like to follow on with targets.
Okay. And finally, Calvin from E14.
Hi everybody, my name is Calvin Chin. I'm a managing partner of the E14 Fund, and we are the official affiliate of the MIT Media Lab. So for those of you familiar with the lab, there are approximately 30 different research groups and initiatives working on frontier technologies across a whole array of what we call anti-disciplines. Our fund typically invests $500,000 to $1 million. We know PhD students years before they graduate, so at very, very early stages, alumni as well. We tend to do about 8 to 10 deals per year. Fund's been around for getting on 2 years now. And areas of focus, the lab has a pretty unique community around it. Members of the research consortium, 95 of the world's largest companies in many different sectors. So, like Jennifer and Lopa, we invest principally in enterprise technologies, although we can also have
So kicking off, because this is about frontier tech, and I think not all of the firms, frontier tech is your focus, but I do want to understand if there are investments in your portfolio that are frontier oriented. But kicking off with MIT, because MIT competes with Stanford, is definitely on the frontier.
really competition.
Or supersedes, given the territory we're in. So the question for me is, if you look at MIT, MIT is huge. I'm sure there are many tech, there's a lot of tech coming out of MIT. So what is the most exciting tech that you see coming out of MIT? Like, what are you most excited about?
Well, wonderful question. I mean, there's a ton of stuff. I get really excited whenever I'm there. Last week I was there for what I call Nerd Christmas. Basically, the 30 different lab groups give lab updates to the 90 plus global corporates. So we get a rundown of about 500 different projects, and it's super cool. And you have an open house, you can walk around the building, and there are prototypes, and you see all the work, and engage with PhDs and master's students. Ask them lots of questions. So I'm sort of flooded with all these really great technologies. I would say a couple of things to mind. The lab, for its 3+ decades of operations, has been always at the forefront of human-computer interaction. So whether that was touch interfaces, textual interfaces, and all kinds of tangible media, like piece media. And I think there's a whole bunch of really interesting stuff happening at the lab right now, whether it's on body, in body, or altering the body for new forms of communication with machines and with other people. One project you might have seen got a bunch of press called Alter Ego, where there is a small sticker that you attach to the side of your face, and based on thinking about what you might say next, the electrical signals to those muscles are decipherable by the sensor here. So actually, without articulating anything, you can follow lines. So it's pretty cool project.
And it's called
Alter Ego.
Alter Ego. Okay. So one of the things that, just thinking about investing in MIT is how do you, what stage do you invest? Because there's obviously the research stage, which then becomes possibly the product stage, which is a whole different phase, and then becoming a company. So how do you see that? When do you typically invest?
So we're typically, we get to know folks super early at research stage, and we're helping them reach towards that product step. I like that articulation that you're making. I guess for us, we have that luxury of working with enterprise, and I think this is one of those things that I think mentioned throughout the day. There are real opportunities where, especially for enterprise technology, where you can facilitate the engagement of large global enterprise with startups. Having been a founder myself, it can be pretty fraught. I think of it as impedance mismatch, where like small company, big company can small company won't bother the big company at all. But I think where you can engage in meaningful interest alignment, then I think there's a lot of great things to happen. For us, that's taking early products, early prototypes to the members of the media lab.
Okay. So I want to kick it over to Jennifer. I'm going to go right away to the other side. So what is the most frontier tech investing that you've done in Minecraft?
Okay, well, what is frontier tech, right? So, right? Yeah, mentally I picture mining for stuff on Mars, and that's new frontiers. I think that the way we look at it, certainly are what are the core platforms and foundations that are now the bleeding edge that are going to revolutionize the boring industries. Boring is good, as there's a lot of others to be. Like, what are the key platforms? AI and machine learning, we now look at that are a company with big data and you do not have an AI machine learning, capability or plans in your product, you're already DOA, right? So that's a big one, really huge area, exciting verticals you can go into with it. Genomics, I mentioned, in personalized medicine, really key areas for growth in health tech, and it's easy to get excited about health tech.
Is there a company in the genomic space?
So we're into that we like, Mission Bio, which is single cell. I see some heads nodding. Really fantastic CEO, great company, single cell DNA analysis, and in Fabric Genomics, which does whole genome sequencing looking for variants. They actually presented an F50 event a couple of years ago. So their sweet spot right now is children's hospitals and pediatrics, when you need to diagnose what is wrong with this child, and you need to know within 24 hours, not 6 weeks. So really powerful technology, and very strong AI machine learning, and that platforms is providing these platforms too. It's one of the great things about genomics, is where you can combine it with big data. The other one is blockchain. And blockchain has kind of gone through the ups and the downs, but it has the potential with distributed data and user data sovereignty. It's going to be a fundamental change. We finally made after very careful consideration, we made our first blockchain investment in a company called Icon. At a seed stage, that's actually our earliest investment. Everything else we have is A and later. So I think we're now seeing the washing out in blockchain of what are the practical uses. Icon does tools for developers who want to add blockchain into their apps. And that's the segment where healthcare actually has a lot of interesting use cases. So that's how we would look at frontiers. What are those big shifts, and which companies are utilizing these technologies properly in a way that makes sense and can create value at scale?
Got it. And one other question for you, just while you're on, is that Mighty Capital is a relatively new firm. You've raised your first fund. I think you're raising next.
Pretty soon, we will be publicly raising our next fund.
So how do you differentiate, do we need another seed? How do you differentiate yourself? Why is Mighty Capital important in this ecosystem?
Differentiation is critical, especially outside of the top tier, large mega funds. What is your unique value? Ours is the diverse expertise and networks of our partner network. We have a side partnership where partners put in some sweat equity and attend all our meetings and all our due diligence and pipeline management can co-invest, and they get first dibs actually co-invest. So we have a great model for our partners and a partner, an LP in residence, LP apprenticeship track, which has been very popular. Even Mozilla, one of our LPs, took advantage of that, and they send their employees through it. On the company side, as I mentioned before, our big differentiation is really our alignment with products account. So really powerful, influential group of product experts and managers, and so they've been a source for portfolio companies. We've got Amplitude out of that, and we're able to invest in DigitalOcean through connections there. And we sit down with all of our portfolio companies and create a strategy and a plan around how we can help them tap into that.
Mike, do you have insights on frontier tech and where you're focused? Sorry, where you're focused on frontier tech?
Well, I think that we're all beginning to realize that as we go through these various cycles, it is one cycle, and we heard it earlier today about the cycle that we're seeing now, and integrating the words like don't use blockchain unless you really mean it's just part of something else. I think we're going to see more and more of that during this, and I'm not willing to say out loud there's coming or the Teare or any of those things. But I just think it's really important to think about new frontiers as combining a number of these things that they've been building in MIT and at Stanford and other places, and that's what the next generation and the next frontier is going to be all about.
Okay, Lopa, so you're a little bit different on this panel. You're from a family office, and I do have to say that Neuron, which is a family office, is a little secretive. It's not in Crunchbase. So tell us, why a family office? So you're investing directly. It's a component of what you do as a family office. So why are family offices investing directly? Why is it appealing for family offices to do this?
I can speak broadly and then a little bit about our office. So Direct investment, venture capital has been a part of a family office's asset allocation for a long time. And as families have experienced that interaction, there's become more and more of an interest to have control of where the money is put to work, as well as more collaboration with the companies in which they invest, and less fees. Just put it out there.
And you don't invest in funds, you just invest directly. And lots of family offices do invest in funds and seed funds.
Yeah. So yeah, there's two models. One is direct portfolio plus invest as an LP in a few funds, and then there's another model which is strictly direct. We are on a strictly direct basis. So I'd say that's, and then the other reason for families to want to invest in direct strategy is oftentimes wealth was created through an entrepreneurial activity. They created a business, be it this generation or many generations ago, and there's an interest to either not just pay it forward, but there's just a true belief in the generation of new business and what it does for our society and our country and our culture and very American capitalism perspective. Yeah.
Yes, no, it does. So when you mentioned when you're doing smaller check sizes, but you're getting sometimes at the seed or Series A stage. So are you investing with other family offices, or family offices very connected, or are you investing with VCs? Like, what does that look like?
Yeah. So for us, as I mentioned, we're relatively young in our strategy, and so for the most part, we're trying to take the most risk-averse route. So we tend to co-invest with families that we know, or small micro VCs that we've had relationships with, or angel networks like Golden Seeds. And I'd say that we tend to, if I was mentioning previously, if you look at the spectrum between VCs and angels, I think family offices sort of fit in between there. There's a lot of value orientation from the angel perspective, but there is a growing sophistication and specialization aligned with VCs, and oftentimes families can go further and follow along as company grows that they can do that.
And you mentioned it's a little bit opportunistic because you're not super public and out there. So family offices really come through networks of, introductions.
I was having an interesting conversation today with an entrepreneur, and she mentioned to me, where do I find these families? I'm looking for this list, and I see angel lists, I see VC lists. I'm like, you won't. It's a very private circle, maybe for reasons you can probably understand. But it's very much like, I would say, venture capital, where if you know someone and they believe in what you're doing, or if a family is interested in writing a check, but they don't want to lead, or they need a co-lead, or want to help assemble capital for the round, they're gonna be there for you, and they're gonna open those doors. So make relationships early, get to know the families, get to understand where they invest and why they're investing. A pet peeve I know is that I think sometimes people look at family offices as angel checks on steroids, and it isn't. It's it is institutional angel check or venture capital check, but it's not. These are sophisticated investors who direct is one part of their mix, and they are being thoughtful about it. So I understand that.
And is Frontier Tech part of your portfolio?
So no, I would say that we look at investing in technology when it's ready for commercialization. So similarly, I think AI obviously is an area that we're looking at. So two examples I give that are closest are we invested in a battery company named Cadenza Innovation. Battery is nothing new, but they're doing something innovative, and we believe it's ideally the frontier to helping make renewable energy more accessible. That would be the frontier technology. The other is a company that's looking to take existing hardware and security cameras and make it more efficient using artificial intelligence and image processing recognition, etc. So that would be where we play. The reason why, and I think it's tough for families to do, I'd say that the risk curve, right, when you're talking about
Okay. So we have a few more minutes. I'd like to see if there's some questions coming from the floor. Otherwise, I have a couple more that I'm interested in. So think of your questions. You can raise your hand. One of the questions I have is if you look at I did a 10-year, decade-long look at seed funding, and we've seen seed funding massively increase within Crunchbase. It's leveled off a little bit at the pre-seed. Given that you're all at the seed and early stage, do you think there's a challenge in our market with, and we see a lot at the late stage, is there a challenge with the sort of Series A, or do you think a lot of companies are failing? There shouldn't be. Do you think companies are finding those outlets? So just your attitude to the sort of life cycle of companies, and whether we're, given seed and late stage and the bifurcation, is there a problem in our market today? You do the Series A stuff.
Yeah, I mean, in all state, I have a CEO husband who's raising a seed right now for his firm, so it's interesting to see both sides of it. But I always recommend that a company try to start backwards to the best of its ability. What's your end game? What rounds do you need to raise in the meantime? What KPIs do you need to reach? Because it can be very difficult for a company who's doing well to get that second seed or to get that Series A. And the worst thing you can do is run out of cash because you didn't think through the proper funding strategy. Maybe the second worst thing you can do is start out with too high a valuation. And
I've seen that.
That is a huge problem because unless you really overshoot your KPIs, and you're not going to have the metrics to get a decent valuation next time.
So, okay, quickly, and then.
I think one other problem that I've seen recently has been being very low. And so, again, working backwards, thinking about how do you build up the investor base to get you to bring into that. So, yes, it's always about the money that you're trying to raise right now, but be very careful to not stay in friends and family too long, and be very selective. Try to be thoughtful about your early stage investors because they're going to help you each round.
Thank you to the panel. Thanks so much.